Hello, welcome to the Circuit, episode 6, that we are deeming Earnings Edition. Hello, Jay. Howdy, Jay.
Hey Ben, greetings Internet.
Greetings, Internet. So, earnings season has come and gone. I'm sure, like you, many investor conversations happened. It was a flurry of intensity. I do feel for those on the street. I'm sure you have PTSD from some of those days because it's the worst amount of hours I think I could ever imagine working trying to cover everybody in an earnings cycle. That's for sure.
Yeah, I mean the first few quarters I did it where I was working market hours. The first quarter was the roughest, but once you sort of like get used to the sleep patterns and push through the suicidal urges, it sort of
Mm-hmm.
becomes bearable.
Mm-hmm. And or coffee, Red Bull, or alcohol, or some mix of the three, I guess. All right. So the way that I thought we could go through this as we were chatting is to break up kind of earnings into categories. So we've roughly broke out kind of foundry, wafer equipment, mobile, so smartphones, PC, and then industrial, which includes IoT. I'm sure we could talk a little bit about automotive and some of that as well. An overarching sort of goal for everybody's listening is not to get into the weeds of necessarily any one company's earnings, but talk about the macros. What are the takeaways from those categories, the dynamics that hit them, and also what companies are looking to kind of navigate through what was is a tricky second half to last year, first half to this year, maybe longer into 2023. I guess it just depends. We can talk about that. So let's start with Foundry. Obviously, TSMC, SMIC, SMIC, and Global Foundries amongst the few that we hit over. One of the things that stood out to me in a number of these was positive in the diversification of businesses, especially within kind of how Global Foundries is positioning itself and TSMC. Obviously, SMIC has areas that are interesting to watch, including sanctions, right? How much that might hurt and or be an impact. But from a fabless standpoint, you look at this from a long time, and I was always looking at how much diversification they had across industries, so they weren't over leveraged to one. That's one of the way management kind of talks about it as a whole. But it looks like yes, things were challenging. They recognized the macro headwinds, some specific categories, but I do sort of feel like that diversification story stayed pretty consistent. Obviously, could have been stronger, but that was definitely didn't leave them subject to one industry slowdown where there might have been pockets of growth in the others. So that was sort of one thing I saw play out.
I think it depends a lot on which of the foundries we're talking about. You know, TSMC. I remember when right before TSMC reported, everyone I talked to felt like the whole world depended on this
Yeah,
quarter at TSMC. It
right.
was really weird. And the numbers came out like better than expected. Everyone was really worried, but it came out pretty good. CapEx moving in the right direction. Their utilization had its pockets, but it seemed to be holding up fairly well. So TSMC, the ultimate bellwether for Foundry looked pretty decent, and stock's up since then. Global Foundries, I thought it's good to have long-term agreements in place, right? They have
Yep.
these multi-year agreements. They're holding up well. Um, and I thought sort of the oddest. Like they did fine, um, but I don't quite know what to make of it. They seem very upbeat on their ability to expand capacity,
Hmm.
so they still think they can get equipment from someone. Uh, and they're also everything I'm hearing from the China foundry side of things is really bad, and SMIC is sort of the best among that crowd. I mean, they're the only ones who are really global players. The smaller ones are just getting beat up really badly in China right now. So SMIC somehow escaped that. Um, not quite sure how, but more power to them, I guess, or less power. I don't know. It was weird.
Yeah, I mean, I think the questions really keep coming back to, I mean, again, I mean, obviously, right, a lot of China manufacturing is leading edge. You know, SMIC is the closest. I mean, sorry, not leading edge, uh, is trailing edge, and obviously SMIC wants to be more trailing edge, but you know they're still a bit behind there. Um, and part of where I think you saw a lot of the semiconductor industry make their points around the issues they had was just around a lot of inventory sitting there. And obviously, if it's a microcontroller or a basic ASIC, which a lot of China manufacturers, people probably did order those in bulk and was sitting on inventory, and that was just going to be a part that got hit really, really hard, kind of similar to the way that we'll get to when CPUs and even to some degree GPUs were hit hard with a glut of inventory. So that didn't surprise me too much. I mean, I saw the narrative come in. I don't know if you did, around what the impact sanctions could have with Chinese manufacturers going into others and concerns there. That got spun around, but it didn't appear that was huge this quarter. I guess that's potentially more of a concern for this year, trickling out beyond, I guess.
Yeah, the whole impact of the sanctions is one. I don't think we know the answer yet. So, two, let's save that for a future episode. A few months from now, we'll see where things shake out, because lots of moving parts there.
Yeah,
and very far from finished.
Agree. Did I didn't catch. So did any mention of, or did you hear any speculation? Because I've heard this, that TSMC had hiked costs, obviously because wafer costs went up, but they were I forget the number that they were increasing their cost to customers, but I know that's happened twice as a cost raise. I had heard that in some areas they may have backed off on that and brought it down. I was just curious if you heard, because obviously that's a bomb cost, and if they were feeling capacity, they could lower some of their costs. But I heard perhaps costs came down, but I never had any clarification of that.
So their cost per wafer continued to increase. Their prices to customers, I think they actually indicated price. They were able to get some price increases out. Whether that's, they obviously didn't give much color or detail on that, whether it was one customer or lots of customers. I suspect. I think that for the large part, they were able to roll through some price increases last year,
Right.
And maybe they're trying to do some more, and those are getting a little bit more pushback. But I think
Right.
something that's interesting, and it'll pop up again in some of the other names, where we're actually seeing a lot of, especially in the industrial space, where some of the analog companies who have internal fab capacity are raising prices. It's not widespread, but there's definitely, that came up a couple times in a couple names. So I think that's a long-term theme I've actually been tracking a lot, is, can semis companies start to raise prices? Because the world says, oh, wait, semis are valuable now, so doesn't that mean we can raise prices?
Right.
I think there's some of that.
Well, and that I think was, it made sense when there was this massive demand that was happening when nobody could get parts, right? I think it became clear that they recognized they had some leverage on supply, because demand was there and supply was low. But that's why I was saying, what I had heard was there was some of it did cool down, and I don't think that was leading edge. But again, right, we knew that everybody who was buying chips was sitting on a glut of inventory, and so I had heard that there was pockets where their costs could have come down, or again, even if short term they were offering somewhat of a discount. So again, if a chip was $75 or $110 before, it came down slightly just to help some of balance that. But the main point is that they're all reeling and dealing with a massive pull forward of spend, where we had more demand than there was supply, and now it feels like that's easing up. And so I just wonder how much their economics might change to a degree again if things get even more hairy economically. So that was what I was sort of fishing for, because I'd heard it. It makes sense, but But yeah, I agree with you. Whether or not they can continue to increase price kind of depends on what leverage they have, and some of that I think will skew leading edge.
Yeah, what I'm hearing is different than that. I mean, it gets to this big unknown question: is what's the economy going to do in the second half of the year?
Right.
And I think certainly from the foundry perspective, they seem all of these companies seem fairly upbeat about that.
Yeah. Yeah, agreed. I heard the sort of consistent uh, confidence in, call it, the second half. If we were an economics podcast, we could talk a lot about where that's going, but that is consistent with sort of what I've heard as well. But again, how much price elasticity do they have? It's an interesting question. I mean, and the example I'll give you is I had heard that some of Apple's chips were costing less than they were 6 months ago, but I don't again have confidence that was just an example of if there was spare capacity, making sure it got used when again you're sitting on a bunch of inventory.
Yeah, and it's Apple, so that could just be,
Yeah,
Apple's always a special case.
Yeah. All right. So wafer equipment. I know we looked at Lam and ASML as the two. I know I looked more closely at ASML's earnings. I mean, obviously, when they're gearing up to continue to ramp production and fulfill their orders of machines. Lam, I think I'll let you hit on that, but I think they were a little bit impacted from sanctions. But again, in this point where wafer costs seem to be increasing, there again appears to be elasticity in wafer cost and price elasticity, if you will. I think that might have been somewhat consistent with at least a few of the names we looked at.
Yeah, I think so. So Lam in particular just got brutalized by the Chinese sanctions. China was, I think, 40% of revenue prior to October, and a huge chunk of that was to a single customer, to YMTC, the memory maker. And YMTC is very much on the entity list, enemy number 2 or 3, high up on that list.
Yeah.
So Lam had to walk away from all of that. So they took a big hit. Their stock's down. That management team is, I mean, talk about PTSD. They don't sound good. It'll turn around, but between what happened with YMTC and then just the whole mess that's taking place in the memory market, they're not in a happy place right now. So it's really hard.
Right.
But I would argue that's somewhat company specific. If you look at ASML results were very much overshadowed by the agreement that sort of took place at the same time, where the Netherlands and Japan both announced that they would comply with the U.S. sanctions. But ASML based in the Netherlands had a lot of questions about that. They seem to, they said all the right things. They're complying, but they don't think it's going to be a big hit to their business. They have a big backlog, especially on EUV, but other places as well. And that backlog actually came down a little bit, but it's still massive backlog of business. So they came out of this sounding pretty good. Again, we don't know exactly how the sanctions will impact them over the long term, but they sounded like a company that makes a machine that no one else can make.
Yeah,
a critical machine that no one else can make. So
yep,
they sounded good.
And it sounded like some of the commentary I heard, last year, almost this time, April-ish, they had some component shortages for some of their manufacturing.
Right.
And I think I got the sense that was starting to ease, which means they can ramp production. They're not going to be constrained with the supply constraints that we saw for foreign components. So did you get that sense too, that that's eased and they're not as worried about that anymore?
Yeah, I think that's another thread that sort of weaves its way through all of these. Is there still are sort of spot shortages here and there that are hampering things, but for the most part, they're mostly eased.
Yeah.
And there's a few companies who are sort of still trying to kitchen sink and throw in all the bad news, who really hit the supply chain issues
Right.
hardest. There's a couple of those, but for the most part, those sort of supply problems sound pretty muted this quarter.
Right. Yeah, I think that's positive, honestly, because even if time of slowdown allows for more of that catching up for an estimated, potential ramp within any of these companies, that's helpful. But obviously, that was a huge issue last year that now kind of feels like it's getting a little bit more resolved within some of these pockets, but not totally solved, like you said. So, all right, let's move to on the mobile side, which is interesting. I mean, there's lots of things you can talk about, not just to the names themselves, but the category itself. But obviously, smartphones was a little bit of a tricky market. Obviously, down. Kind of everybody got hit, which obviously impacted a lot of the component manufacturers and players in there. Everybody sort of mentioned that it was obviously a tough compare, and mentioned they all tried to speculate where we are in the cycle, which I thought was interesting. Obviously, there's names here that got hit a little bit harder because of Apple, and then the broader ecosystem, where some of them may have been over-indexed with iPhone supply. But yeah, broadly, let's talk on mobile on a couple things. So what are a few areas that stood out to you with some of the major component players in mobile?
So I think the big topic is still consumer is weak, and that's certainly true in mobile. It's true in some other categories as well, and that's not so much a sign of impending doom. It's just a function of 21, 22. There was an immense amount of demand pull forward, and they pulled it from this year.
Yeah.
And so things are weak. Mobile is just a brutal sector, but I think we knew that. We knew that sort of summertime of last year. We saw that in their September quarter.
Yeah.
Nobody was expecting great things in December. So I think for the most part, people were looking for any signs of turning. When are we going to bottom? And I think there was a bit of a divide among these companies. I think Qualcomm, Qorvo, Skyworks all sort of started to think that we had bottomed, or we were going to bottom in this quarter. A couple companies said that they would grow in March. March is not a good quarter. It's seasonally weak for mobile.
Right.
But there were some signs of like, okay, we bottomed. But there were others who made it sound like the bottom was a little bit further away. MediaTek in particular didn't sound as upbeat about the March quarter as some of the others. So there's a lot of a weakness out there. That's my one big one. The other two is, there's two mobile phone markets. There's iPhone and there's Android. And Apple iPhone are still, for the moment, unstoppable and did well. And anybody who had a lot of exposure to that tended to do better. Right? So that was Qorvo and Skyworks, I think. Qualcomm has a lot of exposure on both sides of it, and their results were kind of mixed. They did really well with iPhone. Android is still a bit of a problem. One thing that they said on their call that confused me a little bit was they actually said that in their last quarter, they said that they thought that weeks of inventory would decrease in the December quarter, but that didn't happen. So that means the Xiaomi's and the Oppo, Vivos of the world still have a lot of inventory.
Yeah.
Which is, not great. And we'll see a lot of these names a lot of these stocks have really big inventory bumps this quarter, still going on. So mobile is not out of the woods entirely yet, but should be maybe soon. Maybe.
Yeah, I think some of the questions that I think were interesting was how much impact the high end sort of not strong refresh cycle happened, because the debate is always obviously that the Q4, the holiday quarter, is a good higher margin smartphone category sale, and then you move into the second part of the year being lower margin, where you'd expect the MediaTeks and others to do better, where they're not in devices with as high ASP. But if purchases were delayed, because I think that's part of the theory is, well, what was hit was the high end in Q4, those purchases get pushed into this year. Part of the thinking then is, well, how much does that impact the lower parts of the market over the course of this next year if people are then still back buying higher phones and not buying the lower end ones because they're going to, the people who buy lower end phones might be hit worse if the economy gets worse. Hopefully it doesn't. And we have said soft landing. But if it gets worse, then obviously, right, the lower end of that market hits. So those are the things I think are really hard to gauge, but that is something I think that could impact those who are more susceptible to pain when the mid to the lower part of the market doesn't come back.
Yeah, I think that makes sense. It's confusing too because there's so much. I mean, it's a truly global market, and
Right.
you start thinking about all the end markets for the low end phones. It's everywhere, and does a recession in America mean there's going to be a recession in Africa?
Right.
Again, we're not a macro podcast, but I think just overall the handset, yeah, there's still a lot of risk in that sector,
Yeah.
right? Except
Eh,
except for Apple. Like I don't know if you saw, but the Apple talked about their share in China. I mean, they
right.
grew share in China. I mean,
Right.
it's incredible. And that's
Yeah.
it. There's another thing that's important that's happening in China right now is Honor, which was the handset brand from Huawei that Huawei
Yeah. It
spun
was,
off to a private company,
yeah.
has gained a lot of share in China, right? But
Yep.
they didn't they gave up a bunch of share when they exited when they had their problems with the government, U.S. government. Apple took most of that share. Now Honor is starting to come back in the sort of the mid range, and they're taking that share from somebody, but it's not Apple. So that's an interesting dynamic to watch. There is how what's going to happen with Honor.
Yeah.
And
Yeah. They've,
another one, and actually another one while we're on the subject of China, I just want to mention there's another interesting dynamic that I didn't look at there's another handset company in China called Transsion, which nobody in the US has ever heard of because they sell to India and Africa and Latin America maybe. And they're really very strong in like the bottom end. Like they still make 3G and 4G phones and dumb phones, feature phones. But they're actually now moving up and starting to make smartphones. And I think that's interesting. I mean, they've been doing it for a while, but they clearly are expanding their offering of smartphones now. And I think that's important because it means that the bottom tier of the market, people who have $50 phones, are starting to buy smartphones. And so long term, I think that could be possibly a helpful trend somewhere in this mix to start having a healthier, sort of higher value phone down at the bottom of the matrix.
yeah. And that, barring the sales issues we've had, the last few years, I think the market was off quite a bit from its peak of 1.4 billion smartphones. But if you recall, like maybe 5 years ago, I don't know, something like that, everybody was saying, "Oh, it's going to be like 3 billion a year once the entire planet gets a
Right.
gets a smartphone." And again, that's a fine thesis. Like obviously we think a lot of people will have smartphones, but to your point, like when the rest of the world who is first time buyers, so really out there, right, parts of Africa, greater India, other parts of China, those are the price points that are coming in, right? So you're right, that could add a boost. It's just, again, it's not the highest margin, highest BOM of devices, but relevant to a lot of people in that space making components to support the low end.
Yep.
All right, so PC, which we can kind of talk about server too, largely AMD and Intel. I'll let you go first.
So kind of tale of two cities here. We have AMD and Intel both reported same week. AMD did very well. Their data center numbers look pretty good. Their client, so their PC stuff, did not look so good. Their embedded and all the other stuff actually looked surprisingly strong. All in all, pretty good quarter for them, right? There's a little, there's some softness around gaming and PC. Like I said,
Yeah,
consumer is
yeah,
unique for everybody.
yeah,
But AMD looked very good. Intel did not look so good. You and I both talked about this a lot. We both published on it recently. Intel is in a very tight spot, and just to focus on the quarter, their client numbers, their PCs did okay. better than expectations, but people quickly teased out that what they had done is they pulled in a lot of demand.
Right.
They stuffed the channel, as we say. They just sold everything out to the PC OEMs and the disties, just gotten everything out there to goose this quarter, and that's gonna cost them next quarter, right?
Yeah. Yeah.
And
Yeah.
and data center didn't look particularly good. It made some money, but it's still way below where it was a year ago.
Yeah.
They're losing a lot of share there. Um, they announced a whole bunch of things. They've cut a bunch of products. They've cut networking. They've cut everybody's salary. It's but the one thing they didn't cut was the dividend.
That's
So
correct.
so all in all, not a great quarter for Intel, and their guidance for next year just looks really really scary. And I think
Yeah.
most people expect it to be even worse than they guided to.
Yeah. Yeah. I think, it was interesting. I mean, you could look at this from the perspective of, I'll first start, categorically, that there was some concern coming into this quarter that perhaps a data center was slowing down. You didn't really see a drastic just halt of data center, but obviously, some of the cloud providers weren't as, weren't terribly off, but weren't as big as could be, right? Growth has slowed. And I think there was a bit of a concern about, what the impacts that going to have on the chip side. And it wasn't abysmal. Data centers not dropping off the edge, but certainly has slowed some. Obviously, PC got hit really, really hard, and PCs would probably have a very, very ugly year. And the hard part for Intel, right, is they got two things that they're trying to manage through, which I think again is unique to them, not necessarily AMD, right? So there's different advantages. But one, they have a foundry, right? So they are not just a chip company, they have a foundry. And so they have a high fixed costs model, right? And that's what, they sort of emphasize in this. AMD doesn't have that, right? So you've got one check to, look, I'm just a product company. AMD actually sells at high margins. I don't know how many people know this, but they're not the low cost player anymore. They're actually competing in performance and getting really good margins for their chips. Intel's margins dropped, and they're guiding another margin drop, which was, in my opinion, listening to the call and then talking to some of their investors afterwards, the most surprising to them was that their gross margin was under 40%. Kind of a unheard of surprise that really, I think, hurt sentiment and overview. But this is the cost of running said foundry that costs so much in terms of their needed capex to keep funding, to get economies of scale back so that they can increase their gross margin. Just complicated problems. And then you compound all of that with, when you were the dominant market share leader, you just have the most to lose. You're going to lose that. It's going to impact you harder than it does somebody else who's AMD's a roughly, right, per quarter 18 to 22% in either one of those categories, data center or PC. So fascinating different dynamics. But to your point, like, for Intel, this is we need to prioritize, and we need to really figure out what it's going to take to manage through and right this ship. And they just happen to be one of these names that we talk about that just have a lot of dynamics that other companies don't have, which makes it interesting and challenging at the same time to analyze them.
Yeah, I mean, the drum I keep beating is they have one task. They have to fix their manufacturing process. That's all that matters. If they can do that, then they get to graduate to actually having a whole bunch of other problems, which maybe they can solve. But like, if they can't fix this sort of fundamental manufacturing process, bad things are going to happen. And like, to the extent that they're losing share, like, I don't even understand why they bothered to stuff the channel this quarter. Like, why create that friction? It's, I mean, I'm sure they had good reasons for it, but like, from a high level perspective, like, just don't even waste your time. Like, focus on the one thing that matters, because nobody at this point, I don't think any investors are really going to pay attention to client, to data center, all that stuff. We've sort of all mentally we know it's on pause. We can't buy it for the fundamentals, right? Or the business fundamentals. you buy it on the assumption that they can turn around their manufacturing operation. Can they catch up 4 nodes in 5 years or whatever?
Mm-hmm.
And we don't really know. We don't know. They said a few things on the call, like some things moving in the right direction, but I don't think we have enough information as outside investors to really get any comfort with that. And until
Yeah.
that question is resolved, I think the rest of it is, lower priority.
Yeah. No, I agree. Do you sense, I know you had prior and we talked about this, but I'm curious if anything's changed since from conversations with others. Do you sense in this moment, and I say this because the point I'm about to make is not true of AMD. They have what I'm about to ask you. Do you sense that confidence in management is waning for Intel?
Yes. Yeah, I think the street is getting a little antsy. Um, I mean, it's hard, and it's the street has a very short-term horizon,
Mm-hmm.
and so you throw out a couple bad quarters, especially one like this one that was really bad, and the street starts to get
Right.
anxious. I think longer
Right.
term, more serious, long only investors understand the basic problem, and I think they understand what you just walked through. There's lots of things going on, and they understand what I'm beating on, which is this sort of one fundamental problem. Uh, the the other issue is I think there is a growing chorus on the street of investors who want to split the company up,
Mm-hmm.
and I think that there is that dynamic at the board level too. But I mean, I can't. It's hard to speak for the whole street, but my sense is a lot of people who've been around the stock for a long time or been around semis for a long time know that splitting up Intel is going to be very, very hard to do. The problem is that if the company keeps doing really ugly quarters like this for the next 3, 4 quarters, which is probable, they're going to attract a lot of really the wrong kind of attention. And I think it's
Yeah.
probably one of the reasons they keep the dividend is if they cut the dividend, it's some people will see that as an invitation to the activist investors to get involved.
For sure. I totally
And
agree.
yeah, but my take is the activists are going to be a little wary about this. Like activists are generalists by nature, so they don't necessarily understand the complexities of semis. They're just going to take their playbook, which says, "Oh, let's split the company, unlock shareholder value." Like that's the activist playbook for last decade, and in a lot of cases, it works. The problem here is splitting up the company is going to be painful and really complicated, and it's going to take a decade to iron out. I mean, that's what it took AMD and Global Foundries. It took them 10 years to sort of right size
Yeah.
their businesses.
Yeah.
And in the case of
Yeah.
Intel, the fab side of it, the foundry side of it, like that's a huge expense. So how do you split the company up and still fund the fab side?
Yeah.
If you just split it up, you really risk sort of stranding the fabs.
Yeah.
So I think the activists are a little bit wary of getting involved in that.
Right. You're
Uh,
right
but
in terms
again,
of
two or three more quarters like this, and it's going to
right.
be very, very hard to hold them off.
Yeah, I agree. I think you're right in terms of how they know the complexity. I mean, obviously, right. If I would almost bet you that if activists did that, almost none of them would want to touch Foundry right off the bat, right? That's a hard investment. I don't know where you get that capital, but like a lot of the dynamics that we were talking about with the fabless company or the foundries out there, it's like I look at this and I still say, okay, let's just assume that Intel solves the process technology roadmap is in leading edge. I mean, obviously, right? They can still monetize to some degree legacy, but again, we're talking how far back are they going to go? Probably not going to go past 7 nanometer. 10 nanometer, and another process just wasn't as good for legacy. So in that case, how big could, I know you and I'm just speculating this, right? But I'm just throwing out things. How big could Foundry really be? It's not going to be the whatever 70, 80 billion TSMC is. Is it half of that? Is it a third of that? Like, I think the economics for this matter because that kind of tells you how much Foundry revenue is potential there versus how much, let's say they didn't split, how much does Intel need to still then be making money from chips so that they are let's call it 70, 80, I don't know, could they get back to 100 billion again? I don't know. But those economics, I think, matter when their foundry business is not going to be TSMC size.
So, yeah. So, one, I think it's important to point out, and this is data that you and I have discussed a lot in the past, which is Intel is tiny. Intel is less than 10% of total wafer capacity, right? And I remember the first time I saw that number last year, it kind of blew me away. I had to triple check it because, like, I always think Intel is giant. No, they're tiny. They're tiny. Their fabs are a tiny portion of industry output relative to TSMC and all the others. And but let's just go through this thought exercise. Let's say they get through 4 nodes in 5 years, right? So it's 2025, and they can get competitive. I think the bull case for that situation is they're competitive. They get the client and data center business. They start to win back some share, and the model flips around again, right? You have this high fixed cost, but that means you have really good operating
Scale,
leverage once you start to sell stuff.
Right.
So, all right, that's like, and if they can get the manufacturing process right, then only then can they really start to build IFS, their foundry business for third parties. So you can't really start that until 2025 because that's when the process works.
Minimum.
And at minimum, right? And then you got to get yields up, and then the internal stuff is going to take priority. So you're really not talking about IFS being able to even offer capacity until 2026. And then, like, moving a fabless company to move to a new foundry is a big process.
Yeah.
It takes 2 or 3 years of qualification and testing and going back and forth and the legal and the IP and the PDK and all that stuff. Set aside the fact that, like, Intel doesn't really have tools that third parties can use. So, I mean, there's like all this sort of very nitty gritty work that has to take place. So I personally don't think IFS can be a real business until 2030. Yeah. Right. So, but if they can get the process right, then we can start to have that conversation.
Right. Right.
And it's feasible. I don't want to. I'm pretty negative, but I don't want to totally discount their ability to turn it around. But it's
right.
a very, very long time horizon.
Right. Agreed. And at the same time, like I said, even once you do that and you have capacity, and again, right, it's, let's call it more leading edge, that's not huge scale. Like, that's why I keep coming back to, if you're going to have a high fixed cost business, right, which their CFO pointed out has challenges when things are bad and you don't have scale, but you get those economics of scale back. I keep wondering where they're going to get that scale from. They're not going to get product scale again. I mean, the total market for, data center and CPUs is like 330 million, 350 million, something like that. PC is going to hover between 260 and 280 at best, right? Despite what they say about it going back to 300, probably not, if ever, barring a miracle of growth. Okay, well, that's not a lot of scale. You know what I mean? Like, we're not talking a billion chips. So where are you going to get that scale back from to cover your high fixed cost business and then get back to, that's where I really, really struggle. Hence, to your point, the only way this matters is if they fix manufacturing and make manufacturing for other people. But again, that's going to require scale to even be a fraction of TSMC's foundry business size.
Yeah. Yeah.
It's just such an interesting problem, but it's always like you think about it and you're like, man, hard times. Okay, let's move on from them to industrial. Interestingly, I had heard and a couple of companies sort of pointed out that some of the cost curves coming down for other areas of the supply chain was actually helping some of industrial volumes, especially IoT. Some build outs that couldn't get components before and now can. And oh, by the way, now they're cheaper because they're sitting on things. So I've actually heard some positives around some of the broader kind of IoT infrastructure. Obviously, a couple of companies who are in automotive had some good quarters, but automotive's growing from a very small number of companies growing their content in cars. So that doesn't shock me. But yeah, it was interesting to we hadn't talked a lot about, IoT is growing again because everybody was just solving core compute businesses. This kind of glut is slowly helping IoT, which I thought was actually really interesting.
Yeah. That's what I forgot to look up. That's what I forgot to add to the list is Silicon Labs, right? Silicon Labs is the poster child for that thesis, right? Because Silicon Labs a year ago sold most of their non-IoT business, and they've been building this very complex, very full-featured platform for IoT connectivity and processing, and they just crushed it this quarter. I mean, just like huge beat on revenue and EPS, raised guidance way above the street, and just very strong set of results. I mean, more than strong, like just incredible set of results. And it's
Yep.
been hard. Like they've taken a lot of pressure for basically the long-term bet they made, and it really looks like it's paying off. Um, and I think that's exactly, part of it is what you just walked through. Is like they've gotten their capacity, they've gotten through the worst of it, and now they're starting to reap the benefits of that.
Yep. Yeah.
That's a good one. Yeah.
Yeah. It's like I said, it makes sense in retrospect. It's actually not what I saw, but just to talk about or see some pockets of life kind of coming back to IoT is good. And then again, those companies who have business portfolios in IoT, seem to do well. Qualcomm was in that. They talked about the IoT business being up. Same with auto. Good diversification story, which kind of going back to that point. But I thought that was interesting because I don't know where that goes, but to see some of that life in IoT and make that be a category subject that I think could be good over the next couple of years was a good one. That was woven to, I think, some of ARM's earnings. That they were talking about in license growth, which again, if you're just going to sell to the lower end, right, you're not an Arch licensee. You're just helping volumes of chips, which, regardless of what margin they get, is good for ARM. So yeah, I thought that was an interesting one. Did you have any other takeaways from ARM? Because it's interesting, I had a couple of calls from investors about trying to figure out or decipher kind of where the spin was on earnings, right, to look good, because it seemed it was transparent, but maybe not as transparent enough, I guess, was kind of a question, a little bit vague in some areas. I don't know if you had any deep dive on that.
I mean, my big take was they repeated a few times that they're still planning to go public this year. And last I checked, I think they have bankers finally, but they just got bankers recently for that. So my impression of ARM over the last year or so has been they're super reluctant to go public. I think they remember being public 6 years ago, and for whatever reason, that was a scarring that left a mark on their corporate psyche, and so they're really
It
reluctant
was
to go
tough.
public now. Yeah, but
Yeah.
I think this time, let's see where they list. But I think if they list in New York on Nasdaq, and they have a focus more on the American shareholder base, I think they'll have a much easier time of it. I mean, they need to get a lot more proactive about their sort of investor relations and their outreach. I think there's an immense amount of questions about what ARM wants to do. Like you said, it's more transparent, but not great. There's so many easy things that they could be doing right now to sort of advance the narrative and really ease their life as a public company again. I don't think they have to be as afraid of it. I get kind of why they are wary about it, but I think that they don't have to. Don't be afraid. It's okay. It's going to be okay.
Yeah. I think that, and I totally agree with you in terms of the communications on this side. I mean, I know from investors I've talked to, there's just a lot of questions around licensing businesses or IP licensing business as a whole being public companies. And I think a lot of the guys I talked to covered them, when they were public before. And, at that point in time, they were 600, 700, million dollars a year in revenue. So not huge, but obviously licensing businesses are very, very different economics. I think there has to be, to your point about investor education, a lot that just goes into why is it a licensing business, in this case of ARM IP valuable, ARM IP useful, and why is a licensing business a good investment in the modern age, I guess, right? In terms of all of the scale of opportunity. That I think is the resistance, but that I think is actually a good roadshow to go through to try to help people understand the benefits to this, why it's worth investing in, and kind of what that story is around an IP company, just because there's been stigma on that before.
I mean, I actually think we're entering into a really good time to be an IP company in semis. I don't know specifically for ARM. ARM's got a whole bunch of other stuff going on, but I think in general, there's a lot of favorable dynamics for IP companies. And because as you see more companies build their own chips, they're going to need help, right? And like look at Amazon or Google, all those companies use a lot of ARM. And we talked a lot about this last time with RISC-V versus ARM. But for ARM is still very capable and very like ARM cores are still a very important workhorse for a lot of compute. And if you suddenly have twice as many customers, that's a good thing, right? I mean, you look at the EDA companies, we didn't talk about them, but the Cadence and Synopsys of the world have had a fantastic time in the last decade because they're signing up so many new licensees. And so I think that trend is going to just continue, right? Because there's if you're not a semi company, but you're designing your own chips, there's still a lot of things you don't want to reinvent the wheel. It's hard enough to do just sort of the basics, right? And so you're not going to go out and build your own processor core or your own SerDes IO IP, right? You're gonna want to license that stuff. ARM is still in very, very good position to take advantage of that.
Yeah, and I think the side of their
other licensing companies, I was gonna say there are other licensing companies out there. Like Siva is another one, Israeli company that does DSPs and audio and Bluetooth. That has some really interesting AI edge stuff. Similar camp, they've done a really good job of growing their customer base and are sort of extending their product reach and doing some really interesting things. They're in a good place too. And it's like I think the problem is old. The old IP model, the way people think of it, is a company like InterDigital, which licenses IP for wireless and mobile stuff, where they have a fairly small number of customers and very lumpy, and so their results depend. Sort of, did they renew with Samsung this quarter? Did they renew with Apple this quarter?
Right.
I understand why investors don't like that because it's so opaque. But when you're as broad-based customer bases, diverse customer bases, ARM and Siva have, that's a really, really different story. There's a lot more statistical averaging you can do over the model.
Right.
It's much more forecastable than sort of step functions like InterDigital has. And InterDigital is doing fine, by the way, but I'm just saying there's a dichotomy there.
I like your point about, because I think we've hit on this in previous episodes, right? More people are going to start making chips. More people probably aren't going to employ the core designers to the same degree that an Apple or AMD or Intel or NVIDIA does, and not just for ARM, but a lot of the companies that you mentioned, right? The sort of undersold story of that is the services help that they provide as those developments come out, right? Whether that's issues with certification, there's a lot of time. It's not just here it is, go run with it. There's a services component that's actually pretty important and pretty interesting. Yeah. And that's obviously, I think, an important part of that story to help people understand. So that'll be interesting. Like I said, I'm anxiously awaiting ARM's IPO, to be honest with you. It'll make for very, very good conversation. Yeah.
It'll be fingers crossed.
All right, so let's wrap on that good earnings sort of categorical market overview. Maybe we don't have to do an earnings every quarter, but when it's interesting, we will. Something to talk about. So thanks for listening, everybody, and we'll talk to you next week.
Thank you. Bye, everybody.